Ladies and gentlemen, good morning. The bad news is we still have a 17-minute slot before lunch, so our last obstacle before lunch. However, we are breaking up this slot into two. So I will open up with a brief presentation on investment opportunities on the African continent and focusing on the geopolitical risk outlook. And then I'm going to sit down and join my respectable panel and ask them certain questions about how they are running operational risk from their point of view and look at due diligence within funds. Now, my name is Robert Besseling. I'm a director at a company called EX Africa. We are a specialist intelligence company focused on providing analysis and forecasts on political risk, security risk, and economic risk across the whole African continent. Now, if you remember this time last year, the IMF and the World Bank had just finished their meetings in DC, in Washington. And they warned all of us about the problem of debt in Africa. Now, they just wrapped up their meetings again, and now they said actually that debt has now become more sustainable, should be averaging about 55%, or total debt should be averaging about 55% of GDP, generally stabilizing across the continent. And the real problem now is growth, or in fact, the lack of it, the lack of economic growth through many of Africa's key economies, including in some of the hubs in East and West Africa, where growth has really been coming from the past few years. In fact, the IMF and the World Bank downgraded their forecasts for this year to about 3.2%. Now, the stats behind me here are slightly different because we pulled out Libya, which is in a recession of about 19%. It's called a sizable economy. So it's kind of, because the country is in a state of civil war, we took it out here. But still, even so, you can still see that the forecasts by the IMF, as well as the World Bank and various other entities, are significantly more pessimistic for the course of this year, with a potential recovery in subsequent years. Now, why is this happening? In the East and the West, much of the growth remains focused. Despite Nigeria's slow, lackluster growth, despite some problems on the east side of the continent, but West Africa, mostly dominated by Francophone West African countries as well as Ghana, are driving the growth on that side of the continent. On the east, it's countries like Ethiopia and Kenya and Uganda driving growth there. It is, in fact, right here in Southern Africa, in particular South Africa, the most developed, most industrialized economy on the continent, that is still dragging back the average growth. And that's really the heaviest factor on the scale at the moment when you're looking at African economic growth moving forward. Let's zoom in, actually, and look more on the top 10 projected for economic growers this year. On the east side of the continent, Rwanda, very much at the forefront. Ethiopia, I mentioned earlier, and Uganda. South Sudan, but coming from a very different lower base, recently having come out of a state of civil war, potentially recovering further over the course of this year, really boosted by its recovering oil sector. On the west side of the continent, I mentioned earlier, it's Francophone countries like Mauritania, Benin, Niger, Côte d'Ivoire, Senegal, and Ghana, which are really driving the growth from that side of the continent. Bit of a mixed picture. Where are all the other countries? And as I said earlier, it's really Southern Africa that's dragging down much of the growth outlook, as well as Central African economies. And that's mostly because these are resource-dominated economies, which have failed to adjust to the volatility of oil and metals prices over the past few years, since 2015 and 16. South Africa, as you know, it might still be flirting with a recession. Generally speaking, we'll be lucky in this country to avoid a recession this year. And that's, of course, is dragging down other countries in the region as well, including Namibia, Lesotho, Swaziland, etc. And, of course, the real heavyweights of Angola and Sudan also performing rather dismally at the moment, despite the political transition in Sudan, which is underway, and the political transition in Angola, which is slowly, steadily rolling on, and more on that in a moment. And Zimbabwe, of course, apart from Libya, the slowest growing economy on the continent, mostly due to internal political and economic issues. So where are the opportunities? Where should fund managers and development partners be looking for the next key opportunities in the African continent? And I've named some of these countries already. And that's mostly being driven, I will argue, through a spree of liberalization and privatizations across the African continent. Harry mentioned this morning earlier the prominence of privatizations in countries like Angola and Ethiopia. Again, I will argue also that Ethiopia, one of the fastest growing economies in Africa, in East Africa, is really pushing forward with some key opportunities moving forward. Ethiopia is changing its entire economic model from state-driven and interventionist to opening up to foreign investment. Two telecoms licenses will be issued in April next year, slightly pushed back from the end of this year, but still on track for new telecoms licenses there. All eyes are focused on Ethio Telecom. They're going to champion the boon of investors if that telecom sector in Ethiopia does eventually open up. And various other companies in logistics, in cargo, in potential first banking license was recently issued as well. So various different sectors are opening up. And that's happening at a time where the initial concerns of a few years ago of Ethiopia's economic stability are being allayed. 7% growth expected for the next few years. Inflation is relatively stable. And above all, it's those foreign exchange issues, or the lack of foreign exchange that was affecting Ethiopia a couple of years ago, that seems to have been resolved by rebalancing the export-import model, by attracting more foreign direct investment, and by shrinking that current account deficit. There are some key elections on the way, and very soon also a ethnic federal referendum in Sidama, if you've been following that. These are crucial to watch. It's not all just Nobel Peace Prize glory at the moment in Ethiopia. There are still some really serious obstacles and hurdles for the country to jump from a political front over the next few months or years. Angola, this is a country which is trying to liberalize its economy. It's attracting more foreign investment, and it has shortlisted 198 state assets and state companies for at least partial sell-offs over the course of the next 3 years. That includes the national air carrier TAG. It includes the national state mining company or diamond mining company Endiama, and the Holy Grail, one of Africa's largest companies, Sonangol. Still debatable whether the core assets actually will be sold off or whether it will be non-core, less profitable aviation hotel assets that they're selling off outside of the country. However, still lots here to look at for banks, for funds to potentially invest in Angola. Granted, the economy at the moment is barely making any kind of performance. There are serious concerns over debt, which has been piling up over the past 2 or 3 years. That debt mountain should shrink as Angola's GDP starts to recover over the next 2 to 3 years relative to economic output. So there are still some key issues to consider, including the issue of political patronage and corruption, where a telecoms license earlier this year was actually cancelled by the government because of fraud and embezzlement speculation going on around that deal. And then another country that I want to mention, South Africa. And it's very difficult to sell the positivity of South Africa to a room mostly filled with South Africans. And that, however, we have to still look at the ongoing reform of particularly state-owned entities. Finance Minister has just announced or reconfirmed a $4 billion bailout of Eskom. That is not yet fully reflected on the government's balance sheet. But still, moving forward with that reform agenda, there should be new opportunities opening up, particularly for renewables, independent power providers, and other renewable sources of energy, I meant to say. So there's some potential real opportunities there, not even looking at the longer-term effects of LNG, and that will do to the energy mix in South Africa. Where, at the moment, just looking beyond growth, where is all this foreign investment going in Africa? And here I've listed the top 5 African recipients of foreign direct investment. And unsurprisingly, Egypt over the past few years, on the back of a highly successful $12 billion IMF package, has been attracting the biggest chunk of that foreign direct investment. Granted, they are now moving out of that IMF facility, IMF program, potentially reopening up to debt markets late in next year. And there are some concerns, some justified, some less so, about unrest, political stability, corruption, etc., still in the country. As you can see, Mr. Ramaphosa's drive to attract $100 billion in investment is slowly starting to move forward, with a serious increase last year and again potentially this year in foreign direct investment right here in South Africa. Morocco mostly attracting manufacturing investment. Democratic Republic of Congo mostly focused on cobalt and coltan. And then Ethiopia, I mentioned earlier. And much of the investment is going into, again, manufacturing, transport, hydropower infrastructure, as well as, slowly, banking, financial services, etc. So these are the 5 countries. But granted, these 5 countries are really occupying the biggest chunk of FDI. Once you start scaling down from these, it's much smaller numbers that we're talking about. Let's look at it from the other perspective, the political risk outlook. At X Africa, we analyze political risk around the continent. And I'm sure you've seen these types of maps before, but we just recently updated this one at the end of September. We updated on a quarterly basis, and we've seen some significant changes across some of the African countries. Let's zoom in a little bit, for example, on Zambia and Tanzania, darlings of investment, let's say 4 or 5 years ago. Now, considering what's going on in the mining sector in Zambia, or in the mining sector in Tanzania, but also in telecoms, in banking, in cargo, or DSTV Mnet in Tanzania. All of these companies, all of these sectors have been affected by political risk quite severely, with many cases ending up in international arbitration. I'm going to focus on a couple of risks more specifically. Here's a word cloud that we did for an audience of export finance bankers earlier this year, trying to see what they think, identify, or what they associate with political risk in Africa. And many of these are very Africa-focused. Some of these are more broader. But however, I'm going to pick on a few of these. Nationalism being one. I'm going to skip back to my map. Rwanda and Uganda are at the forefront of opening up free trade on this continent. Rwanda is hosting that big free trade conference next year. However, the borders between those 2 countries have been closed for most of 2019, only having been opened for a couple of weeks, mostly due to poor bilateral relations. These countries also have closed borders several times to the Democratic Republic of Congo, mostly to contain the Ebola outbreak there, but also very often for political reasons. Chad, Sudan, Ethiopia, Egypt in Central and the Horn of Africa, again, have closed borders. And then, if you cast your mind back to last month, or even in August, Nigeria started to close its borders with Benin, and now also with Niger. And that's mostly due to unfair trade practices, which Nigeria, backed up by the IMF, is justifying because Benin is violating free trade principles under this big new free trade agreement signed by both those countries a couple of months ago. But there are underlying issues regarding the impact of this as well, involving big companies like Dangote in Nigeria, involving potentially even the presidency in Benin. And beyond that, it's actually affecting the entire corridor of West Africa, of trade moving in and out of Nigeria, all the way from Abidjan to Lagos. And it's affecting all of these countries at the moment. Another word that I want to pick out here is debt. I know that the IMF said we should not be as concerned as last year about African debt. And they said, as I mentioned earlier, that debt is probably going to stabilize at around 55% of GDP over the course of this year and next. But that is only if African governments stick to the budgets they have proposed. And we know from this government, many other governments across Africa, that very rare instances actually, governments stick to the budgets they propose or that the lawmakers implement. And various different countries are still, 7 countries are qualified by the IMF as being currently at or in debt distress. And several big economies are still at high risk of debt distress, including countries like Ethiopia and Ghana and others as well. Very much on the watch list. So we should definitely look at growth, on debt sustainability, and also the actual implementation of budgets by these countries moving forward.